Hey, good morning, everyone. Morning. It is Thursday, May 18th, 2023. Hope everyone's doing well. First, want to say thank you to everyone that came out to the breakdown of the Q&A and the launch of the free futures course that we're going to be doing at the end of May. It's a free futures workshop where we talk about trading not only the summer markets that are going to be a little more difficult coming up, they've already started, but also being able to trade any market condition, understand where this market is really moving and how it's moving based on any conditions on very simple topics that we had covered yesterday. So I really appreciate everyone coming out to that last night. If you do want to register for that workshop, it is completely free. You can go to that live stream that was posted last night. It's the link in there. Also, I'm going to put the link in this description as well. I hope to see you all there. Good morning, everyone. Thanks for dropping some comments in here. I hope everyone is doing well. And let's talk about what happened yesterday. Yesterday, we talked about the potential break for that long side move off of that low 20 area. And we had the opportunity to actually find that low in yesterday's session. I called out the 27 as probably being the low for the market, and we ran into those 70s. So massive 50-point move throughout the day. Tech did well. Everything did well. We finally broke out of this consolidation range, and we were looking for that trend day all of yesterday. So I hope everyone took that into consideration when I was talking yesterday morning. Now, in today's session, we're going to talk about a few different things and how I can see this thing playing out, especially into the end of the week. But there's a few news things that we should cover before that. The next big tech battle is making way after Montana government Greg Gianforte signed a bill that would ban TikTok, the popular short video app that is used by 150 million Americans. So, is the country's first bill that outright bans TikTok for private citizens and is set to go in effect January 2024, barring an injunction of defeat in the legal system. So, proponents of the measure claim it will protect users against the Chinese Communist Party surveillance and from pro-Beijing misinformation reaching the public, while TikTok owned by China's BitDance. So how it'll work necessarily, the law will prohibit downloads on TikTok in the state by fining on any entity, namely the app stores like Apple, Google, and TikTok itself, $10,000. So it would be leveled up per day for each time someone is offered the ability to access or download the app through individual. Though individual TikTok users will not be punished, it's unclear what would happen to Montanans who do download the app before the start of the statewide ban. So, or how authorities would outlaw the usage through private networks. So, Gianforte's bill signed a bill that infringes on the First Amendment rights of people of Montana by unlawfully banning TikTok. A TikTok spokeswoman said in the statement, the bill constitutionally will be decided by the courts. So also, former President Trump already sought the ban on TikTok and force a sale to the U.S. businesses to an American company. And while the transaction with Oracle almost went through in 2020, the lawsuits piled up and an injunction was granted to prevent the app from being outlawed. And the Biden administration later revoked the planned ban, ordering that national security review is in place. But China's tensions and data privacy concerns eventually swept both sides of the aisle and recently led to a notable House hearing. So, however, Congress has passed a bill to outlaw the app on federal devices, as well as probe from CFIUS, and even proposed legislation to ban the app in the US. So, there's a lot of restrictions that can impact Instagram Reels like Meta, YouTube Shorts by Google, and also Snapchat. This ban, if materializes, more about tomorrow than today for the likes of Meta, realistically. So who knows, right? The ban of TikTok could really realistically flood everyone into those other apps and those other outlets. We also have the debt ceiling to talk about, right? Stocks are still looking to extend their gains today after a risk on move in the previous session. We didn't actually get much in the way of concrete developments, but negotiations on the debt limit are continuing, and the mood was lifted by the fact that all the major players reiterated they want to avoid a default naturally. That's what Deutsche Bank's Jim Reed wrote in a note, and elsewhere, the equity team at Jefferies, its franchise picks list, the buy-rated stocks were its analysts that have the most conviction, Amgen, Lowe's, right, and a lot of the other tech names. So we'll take a look at how that kind of shapes up. Big tech is still holding out the upside gains. Yesterday was a massive, massive rally in the tech space, right? A lot of the tech individual companies did post gains. They weren't that crazy. They already had broken out, but the triple Qs and Nasdaq posted a lot of gains. So I want to talk about how this can play out because everyone's super bulled up. Everyone is now bulled up that the move actually happened, right? They weren't bulled up at the lows like I was talking about for the past few weeks, where you want to sustain that distribution low. But now all of a sudden that we're up 60, 70 points, people want to look at this and say, okay, we start buying rips right now, right? Nvidia getting bought at 300, a lot of volume transacted there. I do want to warn a lot of people about that though, because we're at the top of a key level on the S&P. A lot of volume traded at that key level. It's 41.82. We got a rejection from that area. We're now trading 20 points lower. There is a distribution at 72.74, right? 41.72 to 41.74. That's that big distribution ledge where we have a lot of potential resistance. And if we start running under this low 60 or these high 50s, I think that we enter the distribution to the downside again, and that gets punished. If we open below 58, I think that those sellers do try to push it back into the distribution. As long as we can sustain 58, I think that buyers do attempt this. It's going to be much more difficult to look for downside in tech than it is on the S&P. They've been divergent. Big tech is just sustaining its gains and isn't really looking any of the weaker realistically, right? It's selective buying from big tech based on AI runs, based on just general safe haven, safer plays in big equity companies like Apple, Microsoft, so on and so forth. So today I'm going to be watching that very, very carefully. I want to sustain the long into the low 60s if that holds. Anything under 58, you get very fragile. I would say you'd want to watch the mid to low 70s as well to see if any sellers come through. So I have a slight inclination to look for a little more sell to start the session today. And again, 41.58 is going to be a huge, huge pivotal level into the low 60s that buyers desperately need to sustain. Otherwise, we lose a lot of ground. There's very thin volume under that 60 on the S&P 500 futures that can take us all the way back into those high 40s. So just keep that in mind when you're trading today. Don't get super, super biased that we have to run to the upside after this very extended move that we broke out of the distribution. There is a likelihood of that happening, but those key levels that I mentioned have to sustain. Otherwise, you can get pullbacks in the market that can really, really fade this strong rally. So if you guys missed yesterday's live and Q&A and all that stuff, it is still on our channel here. You guys can go and see that and watch that. Please go check that out. And remember, they're going to post a link in the description, for that free workshop that starts at the end of May. And I really hope to see you guys there. Check out community.tradeproacademy.com for a free Discord where we chat on a daily basis. And I'll see you guys tomorrow to wrap up the week. Thank you and take care, everyone. Happy trading. Let's open up our futures room and get this going.